Twin VEEE PowerCats had revenues drop nearly 57% year-over-year, net losses deepened to $11.2 million. Management took decisive action. This strategy began to pay off in Q1 2025. Revenue rebounded sharply, up 91.7% quarter-over-quarter to $3.6 million, well above internal guidance. Gross margin improved to 14.9%, a significant 961 basis point gain year-over-year thanks to streamlined production and better economies of scale. The average monthly adjusted net loss dropped to $333,000, beating management's own expectations by 17%. Twin VEEE's dealer network is expanding, and the backlog is growing, suggesting that demand is recovering, especially for both their signature catamarans and the acquired Aquasport monohull line. Liquidity remains a relative bright spot, with $7.7 million in cash at year-end 2024, although this is down from $11.4 million in the previous quarter due to ongoing losses and inventory investments. The company is not yet profitable, and the boating industry is highly cyclical and sensitive to macroeconomic factors like interest rates and consumer confidence. While the Q1 rebound is encouraging, it's unclear if this momentum can be sustained, especially if economic headwinds persist. VEEE stock has been extremely volatile, surging over 169% after earnings, but this rally has pushed the price well above some technical forecast models, raising the risk of a sharp pullback. The Fear and Greed Index is in fear territory, and technical indicators suggest caution for new buyers at these levels. Bottom line, Twin VEEE PowerCats is executing a promising turnaround with improved margins, cost control, and renewed dealer interest. For investors with a high risk tolerance and a belief in management's ability to sustain this recovery, VEEE could offer significant upside as the company moves toward break-even. For most, it remains speculative. Sezzle, a leading buy now, pay later BNPL fintech, is on a very different trajectory. The company has just delivered a blockbuster Q1 2025, blowing past analyst expectations and raising its full-year guidance. Revenue soared to $104.9 million, up sharply year-over-year, and EPS hit $1, a major milestone for a company that, like many fintechs, has struggled to reach consistent profitability in the past. Net income guidance was raised by nearly 50%, with management now projecting $120 million for the year. Technically, SEZL is a mixed bag in the short term. Longer-term technicals and moving averages are bullish, and several models predict a 20 to 30% upside for the rest of 2025, with even more aggressive price targets for the next 12 to 18 months. The balance sheet is healthy. The NPL sector is competitive and subject to regulatory scrutiny, and any deterioration in consumer credit quality could impact results. However, Sezzle's recent performance suggests it is navigating these challenges better than many peers. For growth